Michael Burry warns housing crisis. China is crashing and taking down USA economy. China's economy is hitting a great wall. Parallels to the '08 housing crisis could unleash a major recession, says University of Chicago economist. In the U.S., it was a housing debacle that unleashed the deepest crash since the Great Depression. Lured by teaser rates, folks who couldn't afford a home left their apartments and bought a ranch, colonial, or condo. Builders kept selling to a new class of speculators who didn't live in the sprouting subdivisions but kept watching the value of their empty abodes jump as nearby homes sold at higher and higher prices. When rates reset, millions of families who had moved from tenant to owner could no longer make the monthly nut. So heavy was the glut that the investors couldn't find renters to cover mortgage payments and taxes. Millions of strapped homeowners sent their keys back to their lenders in a flood of jingle mail as foreclosures flooded the market. Today we're going to talk all about what Michael Burry warns about the housing crisis, China, and how it will impact the USA economy. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. On the face of it, Chinese property developers' debts appear big enough to crash the national economy. But several factors could limit the real estate downturn and the threat of global financial contagion. Any story you tell about China, with its population of 1.4 billion and an economy that has more than doubled over the last decade, will always involve big numbers, scary numbers. There was, for example, a collective shudder in September when the debt woes of one of the country's biggest real estate developers, China Evergrande, climbed to $305 billion, 264 billion euros, as a result of years of aggressive expansion. But that was just the tip of the iceberg. The total combined debt of China's major property developers is now estimated at more than $5 trillion by financial group Nomura. Is that a big and scary enough number for you? Worse still, 20 of the top 30 property firms by sales have breached at least one of 3 debt red lines set down by the Beijing government to rein in real estate speculation, according to Bloomberg News, meaning they're unsustainable. The worst offenders include Country Garden, the largest property developer by sales, and China Railway Construction Corporation, CRCC, which, as well as properties, has built much of the country's high-speed rail network and subway systems. Together with Evergrande, CRCC has breached all 3 debt red lines. New home sales plummet by a third. With property being a key driver of economic growth, contributing about 29% to China's gross domestic product, any major real estate crash could threaten the entire Chinese economy. While new home sales dropped 32% last month as the Evergrande scandal unnerved investors, huge differences in the way the Chinese real estate market operates could limit the impact of any bubble bursting. The reason Beijing created the debt red lines was to prevent a property crisis like the one in the US in 2008. Jiabing Wang, senior lecturer in the economics of China at the UK's University of Manchester, told DW. He predicted that, although a crash would have a negative impact on people's livelihoods, the shock to the wider financial system should be limited. The reason, Wang said, is that most middle-class Chinese had much higher savings than in the West. On average, Chinese consumers saved 33.9% of their disposable income in 2020, according to Goldman Sachs. Traditionally, they have used their savings to speculate on the stock market and in property. Typically, a Chinese household will only take a 60% bank loan to buy a property. Wang said, down payments are therefore 40% compared to just 3 to 6% in the United States, 5 to 15% in the UK, and 20% in Germany. So even if property prices drop 20 to 30% and there's a rise in defaults, the banking sector will be okay, he added. Property owners will bear heavy losses. Although millions of individuals will have to bear heavy losses, a property downturn that was forewarned for years is preferable to a crisis that affects the entire global financial system, like the collapse of U.S. investment bank Lehman Brothers in 2008. Since China began opening up in the late 1990s, property speculation has helped hundreds of millions of Chinese investors become ridiculously wealthy. Between 2000 and 2018, the average price of property quadrupled. Apartment prices in the capital, Beijing, have reached 55 times average incomes. The Chinese property market is already twice the size of the US residential market, and in 2019 was worth $52 trillion. Another difference is that Chinese property owners don't expect high rental yields. Whereas in Western countries, landlords will expect to earn back the value of the property in rent over a 10 to 20 year period, in China it's more like 50, and in some cities 100 years, said Wang. Instead of owners defaulting in huge numbers due to a lack of rental income, most will begrudgingly accept the new reality of lower prices and future values, which is just as well, as 1/5, 65 million, of Chinese homes are vacant. Clearly, there's a massive oversupply, but it's homeowners that are holding many of these empty properties, not the developers. They're all bought, Wang told DW. They're just not occupied by the owners or renters. Developers will go under. That's not to say that some of China's biggest property developers won't go to the wall. In recent weeks, Evergrande and others have struggled to offload assets to help repay massive piles of debt after borrowing costs soared on financial markets. Any collapse of Evergrande, which employs 200,000 people and indirectly sustains 3 million jobs, is likely to be carefully managed by Beijing to limit the fallout to the wider economy. The company has so far avoided default by meeting 2 debt obligations at the 11th hour. Another deadline for payment falls next week. There obviously will be some losses to the banks, but the large majority of developers will be able to repay their debts, Wang said. Wang thinks average property prices are unlikely to drop more than 20%, and much less in some cities. That compares to the 50% crash that several US cities witnessed in 2008. While Beijing will continue to discourage speculation, including trialing a new property tax in some cities, Wang thinks the correction will be short-lived. Urbanization in China is only halfway done, Wang told DW, adding the rural Chinese would continue to move to second and third tier cities. As their incomes and standard of living rise, they will want better housing. While just 17% of Chinese lived in cities in 1978, the figure has now crossed 60%, and by 2050, 4 in 5 Chinese people, 1.12 billion people, will be classed as urbanites. When it comes to China, the big scary numbers keep on coming. Big short investor Michael Burry says the stock market is dancing on a knife's edge, and fears he's being ignored again. Rampant speculation and widespread betting with borrowed money have driven the stock market to the brink of collapse, Michael Burry said over the weekend. Speculative stock bubbles ultimately see the gamblers take on too much debt, the investor tweeted, along with a chart showing the S&P 500 index and levels of margin debt both soaring in recent months. The market is dancing on a knife's edge, Burry added. Burry said the flow of cash from actively managed funds to index trackers and the boom in day traders sharing tips on social media and touting meme stocks has helped to fuel the market upswing. In another tweet, the Scion Asset Management chief highlighted a massive spike in the volume of bullish call options being traded. He added the hashtags caution to the wind and blow off top to emphasize his view that those types of wagers are propelling stocks to extreme levels. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye.